Assalamualaikum warahmatullahi wabarakatuh. In this section, I will discuss about questions 4320 June 2019 under the question 5, which is the topic of compare and contrast. So let's get started. Okay, the question 5, the question says that on 1 January 2018, Scott Burhardt acquired an asset at the cost of 25,000. On 31st December 2018, the fair value of the asset traded in the active market amounting to 32,000 ringgit. The cost model was adopted for property, plant and equipment, and a fair value model for investment property and agriculture. So assume the asset was trained dog. Assume the asset was a trained dog and Scott Burhardt is a criminal investigation firm. The dog works with the firm's security personnel to assist in the investigation process on detecting drugs. The trained dogs can work in the company for 5 years. So the first question is justify the relevant MFRS in recognize the assets. So we can say that this is MFRS 116 because it is this Scott Burhardt is a criminal investigation firm. The dog work with the firm. Security personnel to assist in investigation process on detecting drugs. So investigation process is under the rules of investigation firms. So we can say that this is MFRS 116 property, plant and equipment. So we can see the first question is the answer for the first question is the dog can be recognized as asset under property, plant and equipment, which is under MFRS 116 property, plant and equipment as asset of the company and include in the statement of financial position when it is probable that future economic benefit associated with the item will flow to the entity. The dog was purchased to use in investigation process on detecting drugs that ultimately to generate income for the company. Future economic benefits. The cost of the item can be measured reliably. The company can measure the cost of the dog reliably, which is RM 25,000 ringgit. 25,000. So for the second question is explain the accounting treatment of the asset. So accounting treatment, we need to know its cost in order to calculate depreciation. So we know we must use a 25,000 ringgit, which is initial cost. We could not use 32,000 ringgit because this is a fair value cost. Fair value cost only be used in revaluation models. So as a property, plant and equipment is used a cost model, we only need to use the 25,000 ringgit, which is initial cost. So the useful life for the dogs is 5 years. This is a useful life of the dog. So we need to calculate its depreciation for the year of 2018, for the year ended December 2018. So let's see. Okay, on 1 January 2018, the dog can be recognized as property, plant and equipment or PPE of MFRS 116 at an initial cost of 25,000. Why we did not use 32,000? Because this is cost model. If revaluation model, we can use 32,000, but when it is have revalued. So this is because the company acquired the dog as it meets the recognition criteria of property, plant and equipment. We have explained in the first question. As the company adopt cost model for property, plant and equipment, the depreciation should be calculated every year starting from the date of purchasing, and any change in fair value is ignored. So, for the year ended 2018, for the year ended 31st December 2018, the depreciation expenses of the dog of 5,000 ringgit. How we could say 5,000 ringgit? Because 25,000 ringgit of the cost divided by useful life of 5 years was recognized in statement of property in the statement of profit or loss as expenses for the year ended 31st December 2018, as the cost of the dog RM 25,000 ringgit is divided by its useful life of 5 years. 5 years where we can see this is 5 years useful life. So on 31st December 2018, for the year ended, the carrying amount was 20,000, as the cost of the dog 25,000 ringgit minus the accumulated depreciation of 5,000 ringgit. Okay, it's the final question of A for question 5. Intan will explain about question 5B. Thank you.
For question 5B, assume the asset was a herd of rabbit. Scott Berhad involved in breeding and raising rabbit. For B1, justify the relevant MFRS in recognizing the asset. For the answer is, rabbit can be recognized as biological asset according to MFRS 141 agriculture because it is living animal used in agriculture activity. It is breeding and raising rabbit. The entity also meet the recognition of biological asset. It is the entity control the asset as a result of past event. It is probable that future economic benefit associated with the asset will flow to the entity, and the fair value of cost of the asset can be measured reliable. For question B2, explain the accounting treatment of the asset. Cost to sale on 31st December 2018 was 2,000. In the question, we can see the asset cost is 25,000 and the fair value 32,000. Okay, for the answer is the initial cost of biological asset was 25,000. At the end of reporting period of 31st December 2018, there was a gain in change of fair value of biological asset amounted to 500, which is 32,000 minus 2,000 and minus 24,000, and we will get 5,000, and it will recognize as income in statement of profit or loss. On 31st December 2018, the carrying amount, the biological asset shown in the statement of financial position is 30,000.